Thank you, Eloise. Um, Good morning, everyone. My name is Ed Levers from PayPlan, and I'm really excited today to join Kensington Mortgage's webinar to share with you what we do at PayPlan and how we support customers that might be experiencing a level of financial difficulty that's really getting in the way of you being able to support them with their mortgage application. Wanted to start by giving you a bit of guidance about what we've seen in terms of demand and some of the trends that we've seen over the last couple of years. It's boom time in terms of demand for debt advice. We're seeing this across the sector, and you can see that over the last 5 years, there's been a steady growth in the amount of customers reaching out, experiencing financial difficulty and reaching out for help and guidance. In fact, we saw a record number of customers last year, and we're on track to exceed that once again this year. What's driving that kind of demand? Well, two things really. One are economic factors. Starting with the COVID pandemic, of course, which caused all kinds of financial difficulty to customers. More recently, the cost of living crisis, where a general rise in a number of different areas across the economy has really dragged additional customers into a level of difficulty that they weren't expecting. On top of that, the FCA's consumer duty regulations has put a much greater onus on the financial service industry to support customers, to actually ensure that those customers are getting the help and guidance that they need to be able to reach their financial aspirations. And that means more of those customers are being referred through to help earlier in the process. What we are seeing, as you can see, is we're seeing a far greater number of more affluent customers experiencing a level of pinch with their finances. 2 years ago, maybe 1 in 20, less than 5% of the customers where they had a combined household income of £65,000 or more would have experienced financial difficulty and reached out to us for help. That's tripled over the last couple of years, and that's substantially customers where they've been living right to the top of their means and where the cost of borrowing has increased. It puts them into a situation where their numbers don't add up anymore. And that can be really stressful and really surprising for the customers that happens to. What have we seen in terms of other growth areas? Well, a huge increase in the number of customers running small businesses, whether they're sole traders, limited companies or partnerships, as well as an increased demand for customers wanting to engage with us on a digital format, online, WhatsApp, live chat, etc. Being very, very popular and seeing a huge increase in the demand in those areas. Next slide, please. So I referenced already the cost of living crisis, but I think it's worth shining a light on some of the trends that come from within that. At PayPlan, with regard to the cohort of customers that we support, typically with much lower income and outgoings than the typical mortgage application customer that you will see, we see an increase year on year from the thousands of income and expenditure reviews that we complete each month. About £150 per month being spent increased by each customer that we see. Of course, many of the customers, it's hundreds of pounds more per month outgoings than they'd budgeted for or that they've been spending just a year or so ago. 60% of this increase is derived back to increases in home energy and accommodation costs, whether it's their mortgage or their rent costs. Probably no surprise there, since the cost of energy is at record levels, even though the summer coming up, we're going to see a slight decrease in the government cap. What we have seen as a byproduct to this increase in demand is the number of customers that have fallen behind on priority payments, whether it's utilities, council tax, or their accommodation costs. Actually, we're running at 2 in 5 customers currently falling behind on those kind of priority payments. You might be expecting that to be pretty high given the work that we do with customers in financial difficulty, but that has roughly doubled in the last 2 years. And things like inflation, although it feels like it's under control with current figures around 3.5% inflation rate, certainly not the high levels that we saw at the back end of 2022 and 2023, where there were double-digit inflation rates. Food, for example. The actual price of food is roughly a third higher than it was 2 years ago. It's almost like an indirect tax. and creates a lot of problems where customers are already pretty tight on things, really struggling to cover all of the basics. But without doubt, when I'm talking to mortgage brokers like yourselves, the biggest factor to consider is the Bank of England base rate. If you take a 12 to 15-year view, and we've seen a very, very long period of low interest rates on mortgage, suddenly a jump up to where it is now at 4.25%, it's a bit of a shock to the system. What that typically means is customers, when they're coming off the end of a fixed rate, looking to remortgage or indeed enter the housing market, either as a fast-time buyer or as a home mover, they're getting a real shock when they actually then do the maths in terms of what the cost of their new mortgage will be. And of course, that directly impacts their affordability. Typically, on the average size mortgage of around £170,000 per year, the impact of that is about £200 a month. On larger mortgages, often that's much, much higher. And in the buy-to-let sector, typically we're seeing customers having to make really difficult decisions about the size of their portfolio, given how big an impact they're seeing. So typically, we're finding customers are faced with impossible choices on what not to pay. Keeping a roof over your head, heating and lighting your home, or putting the food on the table are often very real choices that customers are pitched into. Next slide, please. When we're supporting customers, we're very, very aware that we need to support our financial services partners and customers as early as possible in the process. Historically, at PayPlan, we've always been able to help customers when things go wrong, helping them repay their debt in an organised and structured way, completely free of charge, through things like debt management plans and accessing formal insolvencies where that's appropriate. Many of the challenges that I've just been talking to you about come from customers that aren't really ripe candidates for that kind of structured debt solution. They do need guidance and help earlier in the process. We've been working often with banks on pre-arrears strategies where customers might not be missing payments yet, but it's clear that they're becoming irregular in the timing of their payments, or they might be missing payments elsewhere across their whole portfolio of credit. What does that really mean? Well, it means the more that we can educate, support customers, help them make those difficult choices around cutting their costs according to their new circumstances, helping them with things like income maximisation and shopping around where appropriate. Often that can stabilise their financial health and well-being and avoid them slipping into a situation where they're going to fail a credit check, miss an acceptance in principle, or if that has happened to one of your customers, help them rehabilitate their finances in a short period of time. It's often a really difficult ask to get a customer to think proactively about their financial health and well-being. But the more that we do, and the more that we get traction in that, it works really, really well. And in fact, we use our Budget Smart logo to avoid the connotations that might be linked to PayPlan as a brand built up over 30 years of supporting customers in the UK. So what is Budget Smart? Next slide. Your customers can access Budget Smart via the Kensington Mortgages website. We're within the financial difficulties page, and it's a fantastic knowledge resource, completely free to use, not included with any passwords, and therefore customers can access it anonymously. They can go back in bite-sized chunks and consume information in a way that's going to work for them. Gives them guidance on how to reduce their outgoings, shop around. It gives them information on benefits, grants, and other ways they can boost their income. It really gives them guidance on how to stabilise their finances. Customers find Budget Smart really easy to use, as you can see from the survey on screen. And for 3/4 of those customers, it really helped them take control and get rid of their financial worries. 30% of customers make savings, and actually nearly 60% of customers identify areas where they can actually reduce their expenditure. And in fact, 7 out of 10 customers end up saying it's really helped them feel more confident or very confident about managing their finances moving forward. Most customers access it on a phone, and it becomes a really easy way of getting extra information. It's basically a goldmine of information for those customers that want to seize back control of their finances and get themselves into a situation where they might improve their credit score, increase their affordability, and actually just get more disposable income to be in a situation where they feel more in control of their finances. Next slide. When talking about the work that we do at PayPlan to support customers experiencing financial difficulty, I think it would be remiss of me to not talk about vulnerability, because in fact, all of the customers we speak to are experiencing financial challenges, but over half of them will disclose additional vulnerabilities over and above that, whether it's to do with mental health, bereavement, serious ill health, or addiction issues. There's all kinds of challenges which customers share with us. And because we're not a lender, or indeed are completely independent and confidential, we find that more than 9 out of 10 customers will share very openly and voluntarily the information that they've got about their vulnerabilities. Why would they do that? Well, whilst we're focusing our expertise and knowledge to help them get back on track with regard to making payments across all of their credit commitments, that enables us to access all of our network of partners who are specialists across all those different areas of vulnerability, many charities and specialist organisations that have got expert guidance and help to support those customers get the support and help they need. You can see just a small example there of the 65 plus different organisations that we work with that are able to help customers and their families respond to the challenges that they have in their life. So in summary, on the final slide, I thought we'd finish on some customer feedback that we receive at PayPlan. Because true, many of the customers that we're helping have been struggling with their finances for many years. But we are also now seeing many customers that have just started to run into difficulty, maybe due to a change in their personal circumstances or to do with the financial impacts that I've talked about a little bit earlier in this session. For those customers, suddenly it's a huge weight off their mind, the fact that we're able to help them get back on top of their finances, start making regular payments across all of their different credit commitments. And it's not just in terms of their getting on top of their finances. For many customers, it's a transformative impact on their mental well-being and certainly their financial health, and that constant nagging worry that their finances aren't fully under control. That's a real legacy of the work that we do, helping customers get back in control of their finances.
Wonderful. Thank you so much for sharing that presentation, Ed. It was fantastic. Some really interesting data points there. And in fact, one of the ones that really resonated with me and in fact somebody from the audience today was the number of increasing affluent customers that require support. The question they've kind of posed is, why do you think that is? Why are there more affluent customers that are needing support at the moment?
I think there's a couple of things going on there. One is that we are seeing customers more readily willing to talk about their finances and open up. And whether it be their bank, their mortgage provider, sometimes their credit card company, more willing to access help earlier in the process. Rather than waiting until they're horribly out of control, they're recognising that the numbers don't really add up and their situation isn't really improving despite some belt tightening moves that they've made. And therefore, they're willing to come through and look for our guidance earlier in the process. I think the impact of the borrowing rates has a big impact on this though, because what we're seeing is customers where they've been able to borrow up to the lifestyle that they were able to earn. And it doesn't necessarily mean they've had a huge drop in their overall income, but because the cost of borrowing is so much higher, actually, if you've lived to the max to enjoy standard of living that goes with the hard work that they put into their life, suddenly numbers have changed quite dramatically in a short space of time. And those customers often realise, I can move things around a bit, but fundamentally something's got to change, and therefore recognise that they do need that extra bit of help.
No, absolutely. And I think brokers at the moment are presented with very two polar opposites. They've got customers coming up for 5-year renewals that are previously on a very low rate, experiencing that hit and really having to have those conversations. But also then the difference of customers that have either been on a 2-year fix and are now looking at a slightly cheaper rate, or potentially moving from a specialist to a high street if they've had the right support in that period of time for their credit. So really interesting time and challenging time for brokers navigating those different customer needs. I suppose from your perspective as well, is there any other recent trends that have surprised you and your business in the current market lately?
I think the ever increasing march of requiring online support is very, very interesting to see, because and it's, sometimes when we talk about, we support customers on WhatsApp, so we don't do digital advice. It is all handmade advice with expert debt advisors actually, coming through on WhatsApp, sharing information with us via that route. They might eventually talk to us over the phone, but only once we've gained their trust. And actually seeing that in the 5 years that I've worked with PayPlan, it's very, very clear that that's been an increasing trend and continues to be. Customers are much more comfortable to share information via that route than historically they would have been quite cautious about doing. And it's being aware that that route is very valid route. And when I've been talking about things like a budget smart tool, where rather than talking to an expert advisor, sometimes customers are quite happy to start their journey by having a look at the content that's there and then reaching out to us when they need a bit more guidance. So yeah, definitely an emerging trend.
No, absolutely. I can completely agree that I suppose having the anonymity to be able to have free and open conversations can be really kind of supportive, and using digital to utilise that is key. We did explore in the last webinar we ran actually around Gen Z and how a lot of the younger demographics are reaching out to different types of technology to support them in their home ownership and absolutely evidently their credit kind of score journeys as well. I suppose with you mentioning the Budget Smart tool, I will mention to the brokers listening today as well. We will send out a link to where that's hosted on Kensington's website in the follow-up email as well. So please do head over to that and have a look. It's a fantastic tool. I suppose last question for me then, Ed. With an increased focus around consumer duty and lots of regulatory pressures and vulnerability, what would be your top tip for mortgage brokers that are listening today to help them navigate the complex landscape they find themselves in?
Yeah, really good question, because I think reassuring customers to reach out and get guidance early is super important. What historically happens is that customers are really bearish about sharing information during an application process where they think it might impact affordability. And then if they do get a challenge around either max affordability or on the acceptance in principle, customers, it's an opportunity really to improve their financial health, to do something about it before it gets out of shape, and therefore reaching out to us and to others to take proactive action to be able to save money on different things that they spend money on in terms of credit commitments. Make some changes, get into some good habits that's going to make a huge difference. Don't wait for things to get out of shape, and certainly don't have that fear factor that speaking to someone is going to kill your credit score, because it's certainly not. There's all kinds of things that we can do and guide them on that don't actually impact that at all. And it's better to do that before you start missing payments and getting to defaults and all the things that happen later down the road. So spotting it early and taking action is super important. These are going to be,
thank you so much.
Yeah, I was just going to say, these are going to be the customers that will come back to you in 6 months if they fail affordability or that they get a decline. Actually, they'll sort their house out and they'll come back to the same broker if you have that brave conversation to guide them through on what they need to do next.
Absolutely, and definitely within the specialist space, what we find is customers that are well supported by their broker, and that broker helps them through getting whatever their mortgage journey looks like and supports them with that, are returning customers, are customers that will leave you 5-star reviews, help you grow your business by referring you to friends and family. So they are absolutely like magnets. So really, really worthwhile getting these tools under the belt. But thank you so much for your time and for answering my questions, Ed. Really appreciate you joining us this morning.
Thanks, Eloise.